Hi everyone, I'm Fiona Forbes for InvestmentPitch Media, and I'm here today with two gentlemen from AIS Resources, Martyn Element and Phil Thomas. Gentlemen, how are you?
Great,
Hi.
thank you.
Hi, Fiona.
Fantastic.
Well, first and foremost, let's talk about the company itself. Tell us a little bit about AIS Resources.
AIS is an investment issuer, which, rather than get into all the idiosyncrasies of that, it's a very attractive stock because you can take different tasks on without having to change or apply to the exchange. And it also, in a nutshell, becomes a mini merchant bank as well. And it's been around, I think, since 1968. It's never been consolidated. And we've had a lot of fun with it over the years from different deals and putting things in. But because of market conditions, we got involved with Lithium a number of years ago. And through that, I met Phil Thomas, who lives in Melbourne, Australia. And we had a very successful run. Last time, Lithium took a very big run. We were working in Argentina, which is where Philip's had a lot of experience. And the stock went up to an $80 million cap. And it did that really on the opportunity of drilling. It's not that we made a discovery. So, since then, we've done a few other things as a company, getting into gold, getting into magnesium. And now, it would be 2 years ago this month, Lithium was starting to show some signs of life. And I asked Philip, would he, mind starting up the engines again in Lithium in Argentina, which he was, as usual, fantastic and really good contacts. And almost overnight, we ended up getting some really good properties and still have those properties. And from those, we have been able to put together many, many deals and utilizing the investment issuer aspect of the company, where we go to other public companies and they want to get in on the lithium and they pay us to get in, and we get royalties, we get carried positions, we get shares in companies, which we're allowed to take once again as we are an investment issuer. So it's been fantastic. However, I will stop in a minute and let Philip take over. But the reason we're starting here today is because although we've done 5 of these deals, and all of these companies are either fully financed or very easily to be financed because of the current conditions in lithium, which is a good thing because it shortens the odds when you've got the money to go looking. So we've done a great job at doing what we've done, but we haven't done a good job of explaining the real values of what we put together. And I thought today is the start of us telling the story, and I start with you. And Philip's in here from Melbourne, Australia, and I'd like to pass over to Philip now to speak about these deals that we've done and more to come.
More to come.
In the lithium patch.
All right, well, tell us a little bit about these deals. What are the details?
Yeah. So when we saw the lithium price increasing over 50,000, then it was 60,000, then it was 70. I thought, I can't go up any higher than that. It's 75,000 now. We pulled the trigger and said, right, it's time for us to option some high quality exploration properties. And in the Positos Salar, we drilled in 2018. We got absolutely sensational results, something in the order of 127,000 litres an hour coming out by itself. Wow. From the hydrostatic pressure in the salar, plus some gas underneath helped as well. And but when we did the analysis, there was too high a level of magnesium in the brines, and in those days the technology just wasn't around to manage the high magnesium. So we abandoned it, but kept our options open to option the properties. When the lithium price started to drive up, we thought, now's our time to go back in and see what we can do in terms of managing it. Plus there was a group called EcoSolve that came out with a direct lithium extraction, a DLE solvent exchange technology. So combined with that, we then optioned Positos 1, 2, 7, 9 and the Incahuasi Salar, which is about 120k to the south. And we staked got an option over an area called Candela 2. We then hunted around and looked for a partner, and New Tech Lithium were keen, so we optioned it to New Tech Lithium, which then became Spey Resources. They drilled 5 holes, got fantastic results, both in terms of flow rates, pumping rates, and lithium chemistry. And so they, fast forward, after the 5 drill holes went through, they decided to exercise their option and buy the property. Embedded in that transaction was a 20% free carry for A.I.S. Resources. So now they own 80%, we own 20%, and they're now just basically doing all the planning for 6 or 7 production wells. So all in all, that looks like a successful production proposition, and Spey is proceeding post haste to put a EcoSolve plant in. What that means is that if we do some basic numbers, 10,000 tonne plant at $70,000 a tonne is $700 million a year. A.I.S. Resources clips 20% of it. Say it's $600 million after production costs and capital amortisation and all the other costs that go into it. And we're going to pick up 20%. So A.I.S. will be the receiver of $120 million a year.
Exciting stuff.
That's amazing.
Yeah.
And you look at the royalties around in the gold market, in the nickel market, in the iron ore markets. This makes them all fade into insignificance. And the key thing here is that they're looking at a 2-year production cycle. So this is not the usual 8 to 10 years that it takes to put a copper mine into production or a gold mine into production. This is like a 2 to 3 year cycle, and A.I.S. will be the benefit of it. Of course, all the milestones of putting in the production wells will be reflected in the A.I.S. share price. So as we get closer and closer to that value, we'll start basically producing a much higher share price, or recognising a much higher share price. And so our income stream will start increasing. So using that model, we then went to Positos 1, Positos 2, Positos 7, Positos 9, and basically they're all close to the production stage. 7 and 9 still have to be drilled, and there's a company called C29 Metals have optioned those from us. We get an option fee up front, so we get some cash, and then we can exercise our option to acquire the property and then on-sell it. So that's our short-term business model, where we generate revenues. Our long-term business model, long-term being 2 years plus, is the royalty. So we have a 7.5% royalty sitting in Positos 1, Positos 2 and Positos 7 and Positos 9. So if they all go into production at 10,000 tonnes per option, and that gives us 40,000 tonnes multiplied by 7.5%, at even at $30,000 a tonne lithium price, it's a significant amount of money. It's $200 to $300 million a year, US dollars, of money coming into A.I.S. So our outlook is significant, and we just have to be patient to run that 2-year period. However, we'll be getting income as those options are expired, because we have a markup in the cost of the properties. So that's kind of a thumbline sketch of the financial model.
Recharge.
Yeah,
Okay.
yeah. And so we've got all those projects sitting there, all moving at the moment.
I also want to add that we've done these deals, and spending time last night with Philip, we, A.I.S. as a company, we have more possibilities and more properties that we can be working with in Argentina. We're also looking at something outside on the spodumene side, but there's so much to go at right now just with what we have, and we have great people and great infrastructure on the ground in Argentina. So it's just a lovely situation, and the market doesn't really know about it at a, what is it, $8 million, $6 million cap or something with A.I.S. right now. I mean, it's nothing. It's
well, that was going to be my next question. Because I mean, obviously there's a lot of players in the lithium game. What does set A.I.S. Resources apart from the other players?
I think Philip put a label on it just a couple of weeks ago, but Fiona, it's a very moving target for us too. I mean, we're growing and growing and growing and growing. We keep doing these deals successfully, and as I mentioned earlier, they're getting financed because the market is hot, which is a lot of the time you can have a really great property, but you can't find the money to see it through. Well, of course, because it's the only thing that's really doing anything in the market right now, that and uranium to a certain extent, these properties, these companies are getting financed, which takes off a lot of the spike. And I think that that is helping us immensely, and I think that we're just going to keep growing, and get out the word of what we're doing. I think is critical. Is critical to what we're doing.
Well, let's shift gears a little bit and move from South America to Australia, from lithium to gold. Tell us a little bit about what AIS has going on in the world of gold.
Well, we had a company here in Canada that became unbelievably successful. Ironically, it was the Victoria Goldfields, which have yielded 80 million tons of gold or something, 120, 130 years ago, and not dissimilar to some of the gold rushes we've seen here in this part of the world. And but it took a Canadian group, Kirkland Lake, to go into an old workings of an older, from a long time ago, and they cleaned the clock a little bit to put it, of the Australians, because Kirkland Lake came in and they did Fosterville mine, which is the well, I don't know what title people are giving it today, but 4 years ago, it was the most profitable, richest gold mine in the world. Philip, is that a good description?
Yeah, they had something like 2.6 million tonnes of gold with an average grade of 31.5 grams per tonne.
Unbelievable, 1 ounce basically.
Yeah, which is substantial to say the least, but it was kind of a bit of a checkered history in the sense that they didn't figure out where the gold was at depth until about 12 years in. So they went from a fairly small resource to a massive resource almost overnight when they figured out what the actual geology was looking like.
And it's now owned by somebody else, bought Kirkland.
Ignacio.
Huh?
Ignacio?
Ignacio bought them out. So and then first property we did, I said to Philip, well, how close is these Victoria Goldfields to where you are? He said, well, it's about an hour on the motorway, Martyn. So I said, can you get up there, Philip? First property he got, it was the first one?
Yes, first one.
Was 11, the way the crow flies, 11 kilometers from the Fosterville discovery. Closest property to the Fosterville mine, and had some nice things going on in it. We've done quite a bit of work on it. So we are drilling as we speak. And we will go into some of these unbelievable old targets in the coming weeks. And my thought is that by the time it gets in, we drill it, we get core that looks interesting, we have it assayed, it'll be 3 months away. But when the gold isn't going to stay down here at this price forevermore, please. So, we will be ready on that market as well.
All very exciting stuff, gentlemen, but any final words for our audience about AIS before we sign off?
Yeah, I think we're looking at a sustained lithium price because of the prices people are paying for properties. Ganfeng paying $925 million for the Pozuelo Solar, Rio Tinto paying $600 to $700 million for the Rincon Solar. So they're making those investments which are significant in size because they have a view on the lithium price. We are kind of poised, and probably we have a couple of years to wait to take the full fruits of our efforts, but we're getting trickles and starting to get significant amounts of money coming through. So I think AIS Resources could be a sleeper in the lithium market. In the gold, we've got some pretty strong targets to hit, and we've got a great team in Melbourne, especially in the Bright area where this particular project that Martyn was talking about. We've got another project called Kingston, which is 167 square kilometres, and we actually have a 15% interest in a gold mine there that may start to produce if it goes outside the prospect licence area. And then we've got the Turleen Fosterville project, which we've done some fantastic geophysics work. We've got the drill targets lined up, just basically have to arrange it.
And we've got cash flow going on because of the lithium, so we can afford to, and we can afford to tell the story. And I would say with what we've done today, watch this space, because you are the first time that we're starting to explain what we've got.
We would love to have you back because I need an update on all of this. We look forward to an update on everything that we've touched on today. Martyn, Phil, thank you so much. And if you want to find out more, you can go to AISresources.com. We'll see you next time. I'm Fiona Forbes.